The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, let's take a look at the markets. Wrapping things up on Friday. Relatively down day. Some headwinds. Had a higher U.S. dollar. Seemed to be one of the main culprits there. But considering where things started in the overnight session into Friday morning, we were higher. Well, beans finishing up with some double-digit losses. Quarter wheat lower. Plenty to talk about here in the markets, and helping us do that today as we wrap up a week of trade, Dwayne Bussey with Bolt Marketing in South Dakota, joining us here today while we wrap things up here at Orlando from the Cattle Industry Convention. Dwayne, good to catch up with you again, my friend. And we were chatting off air a little bit. Pretty nice weather ongoing up there in the Northern Plains, isn't there, Dwayne?
I know. Normally when you'd be video chatting me from Florida, I'd be probably pretty upset. But honestly, I know we're a little tougher in the Dakotas, but it's 40s and 50s. We're walking around without jackets on, and I'm struggling to ice fish anymore, Jesse. So it's crazy nice out.
It's shorts and t-shirt weather, right?
Yeah,
that's what I always used to say.
Know.
Yeah, that's what, when I was in north central Iowa growing up, I used to say, yeah, 40s in February is shorts and t-shirt weather. So
absolutely. Kids don't need jackets or anything. Yeah.
No, not at all. Not at all. Well, hey, buddy, great to have you on the show again. Let's take a look at the markets, and to what I was mentioning there at the open, higher dollar. I have to think that's the main culprit in grains on Friday. I don't know, these markets all week long, it's kind of been a seesaw back and forth of money flow, and most of the trend has been lower, of course.
Yeah, it has. To maybe back up and review what happened this week, you had end of the month right in the middle there. And I think with the funds aggressively selling corn, soybeans, and they've been selling wheat too, I think there was some profit taking at the end of the month, which rallied the markets. And that's good to see. But boy, once we flipped the calendar the last 2 days, it seems like the funds really stepped back in and sold the soybean market very hard. Corn held in there pretty good until today, but you're right. Probably today's action tied a little bit back to the sharply higher U.S. dollar, which is tied to the jobs report we got this morning, which was sharply higher than the trade estimated, which makes the trade start to think that we're not lowering interest rates in March. Maybe we're not even lowering in the first half of 2024. If the economy is doing well, we're increasing jobs, increasing what people get paid. The only reason to lower interest rates is if the economy is struggling. So kind of an interesting, a little bit of a flip on the whole economic side. But yeah, not good closes in the soybean market for sure today, though.
Yeah, well, to your point, let's stick on the economy and the job stuff here, because I think it's a big picture outlook here. It's really important, of course. And we've had a lot of economic data thrown at us this past week, not just in the U.S., but China as well. We started the week with the Evergrande news out of China and worries about the health of their economy. What could that mean for how much is China importing and buying and this and that and consumption? And so I don't know. It just feels like there's been a lot to unpack in terms of economic data that has in turn been an influence on grain and livestock markets this week, Dwayne.
Oh, especially this time of year, right? When, we're now watching the growing weather in Iowa or Illinois, right? You watch demand, which is a weekly export sales, maybe a USDA sales flash here or there. So you start to look at outside markets more and more. And you're right, the economic news out of China continues to be somewhat bearish, I guess. They're just not recovering from COVID like the rest of the economies are, it seems like. And of course, they're the economy we watch to buy our soybeans and even some of our meat. Now they've been buying more of that. But yeah, with the U.S. economy doing well, it seems like the cattle market has done well this week, and funds buying that. And the cattle inventory report, I'm sure we'll talk about later. But yeah, outside markets, big influence this week, along with different reports. It seems like Brazil's crop got a little bit smaller this week from the private forecasts. But to my point, does that really matter if their soybean basis is widening out and their farmers are selling? And if China's not buying from us, which we had cancellations this week from unknown buyer for U.S. soybeans. Got to assume that's China because they weren't in buying any new stuff. And But Argentina's crop size got a little bigger this week. So there you go. I'm kind of throwing it all in one lump sum there. It's been a heck of a week like it always is.
Yeah, it has been a heck of a week. That is no doubt. And I think about just all these bearish weights on this market. It's something that, unfortunately for producers, when they look at the price, a lot of them aren't loving it. But at the same time, compared to where we were a few years ago, prices aren't that bad. But it just, I think it heightens the risk management aspect substantially. I think here at this juncture, doesn't it, Dwayne?
Oh, absolutely. I mean, we talked at the end of 2023 that, the year in review for me was the end of the bull market in corn. And I think everyone can kind of agree to that and see that now. We're going to have higher supplies, barring some sort of drought like 2012, which honestly, with this weather lately, everyone's starting to talk about that again. So, I mean, I'm not going to panic sell, but you're right. It's in general, these prices aren't bad, but it's been so good lately for farmers that it's hard for us guys to go back to just trying to break even or make $50 an acre. But I think that's what we're looking at this year. And to your point, puts a big importance on risk management moving forward in episodes like this where we can talk about that.
Well, and two, another aspect of this market is that funds continue to remain extremely short, really, in all of the grains. And I think about in terms of soybeans, you mentioned a pretty rough day in beans. And, with beans settling up here, 12, sub 12, I mean, does that signal another leg down? We recovered here earlier in the week and got back above 12, but then ended the week on a sour note. So, I mean, what does that do chart-wise price action here in terms of the soybean market? I mean, how low could this thing end up going potentially?
Yeah, lower, 1145 would be my guess. That's the contract lows. I was selling early this week on the board. As a producer myself, we still got a lot of our soybeans, sadly, some on commercial storage yet. But don't have the basis I like, so we decided to sell the board instead of sell cash. But we did sell some cash as well. Breaking 12 made me think we're going to go down 11.45. Bounces in the middle just to prove me wrong for a day and make me look stupid. Now today it looks good again if you're short. Very negative close. I don't like the way it closed. But 11.75 is your first support. Then 11.45 is contract lows. I'm looking for somewhere in between those two. We have a tight supply of soybeans, Jesse, but if China's not buying any more from us than anticipated, we can get through with tight supplies. I mean, our crush is great, right? We had a crush report from this week, just yesterday. It was for the month of December. New record again, about 9% higher year over year. All that news is great, but if China's not going to buy those extra soybeans from us and Brazil farmers are active sellers, the downside is the path of least resistance.
Well, and in terms of soybeans versus corn, I know a lot of folks are already talking about that U.S. acreage battle for this spring. I mean, if soybeans start to go lower, we like to plant corn. I mean, what's that going to do to that ratio in terms of, the fight for acres between corn and beans? I've talked with some folks, and you can attest to this. You're a farmer yourself. I mean, I think a lot of the normal rotations are probably going to stay in place in the heart of the Corn Belt. It's some of those fringe acres that we could be looking at changes. But again, if the economics aren't there to plant soybeans, people are probably going to plant corn, right, Dwayne?
I know, you're right. And I live in Northeast South Dakota, which to me is like the heart of fringe acre country. We have a lot of prevent plant. We don't know what we're doing until very late in the growing season. It just seems like that's just kind of where we are right now. And you're right. Earlier, I was suggesting a 4 million acre switch, and that's just because of supply and demand. I thought we could easily pull 4 million acres out of corn, put it to beans, because I thought demand would be good, and we got tight stocks, and it just made sense. These prices that you're talking about here and the way soybeans are struggling, they don't suggest that switch is going to happen. I know the rest of the trade has been talking about maybe 1.5 million acre pull down off of corn. That's too many corn acres. But to your point, like up here, I've got no snow. Everyone got fall tillage work done that they wanted. If it stays like this, if we have an early spring, what do you think we plant extra of? Corn. It's just the way it goes. unless the prices for both crop drop hard enough that farmers are just scared, maybe it's cheaper to plant soybeans. So maybe you plant soybeans thinking that it's the crop with the least amount of risk, or I can lose the least amount. But no, for me up here, being a farmer in this area, I can tell you the number one driver of acre shifts is the weather. And right now it does not look to be a problem, but it's February 2nd too, by the way.
Mm-hmm. We are talking today with Dwayne Bussey from Bolt Marketing. He is joining us as we're wrapping things up at the Cattle Industry Convention and NCBA Trade Show at Orlando, Florida. Dwayne, I want to ask you about the wheat markets a little bit too here, kind of rounding out the week. I know in terms of wheat, at least in the U.S. side, we're going to be waiting to see some of that winter wheat crop come out of dormancy here. That's going to be a big driver in the weeks and months ahead, I think. Still got Russia out there. There's rumors that China has been sniffing around some Paris milling wheat, I believe. I mean, in your eyes, looking at these wheat markets as a whole, what stands out to you? What's something we need to keep an eye on here in the month of February?
I just have to say the trade action this week wasn't too bad for wheat. Considering today, we already mentioned that the U.S. dollar's up 900 some points. Usually that's a staple for, so wheat was down 15 cents, right? No, it was around unchanged in Chicago. And not a bad week at all. We're in the middle of the trading range that we've been in. I think the story for me for wheat right now is, if there is a story, it's that the funds already sold a massive amount of positions, and I don't know if they want to add any more to it, which is good. Doesn't mean the low is in and we have to go higher. I mean, I do think the low is in, but at least they're not aggressively selling like the soybean market this week, where it looks like they want to add to their short positions. So I don't really have a bullish story, Jesse, to say that, China's going to buy more wheat from us. I mean, like you said, there's been talk of it. We don't really see it. We don't have a huge amount of wheat, especially Minneapolis wheat, the spring wheat stocks. But if China doesn't step in and buy it, does it matter that we don't have a lot of stocks here? And I guess the answer is no, probably not. And then again, you and I talking about losing corn acres. So that means we have spring wheat available acres to gain, but it's kind of, instead of an acreage battle, it feels like we're setting up to who has to take the acres type thing here. And I don't know if any of the crops really want them that bad, sadly.
Yeah, that's a very, very good point. I would agree with you on that. It's going to be just interesting. And back to what I said earlier about the funds being short in these markets, realistically, until there is something that forces the fund money, the managed money to get out of their short positions, I feel like that's just going to be a depression on some of these prices, right, Dwayne?
You're absolutely right. Look at the soybean market this week. We kind of had that rally at the end of the month here on some profit taking. It's almost like you flip the calendar and they came back in and sold it hard, because really the Argentina forecast didn't change that much. I mean, that's worth noting here that, after perfect conditions, they were dry last week, they're dry this week. And if those rains don't come in next week, I mean, you've got a bullish story there. But look at how you've got that hanging out there. But yet we were sharply lower for the week. The funds just like to sell. You're right. But to your point, I mean, eventually, not over maybe the next month, because like I said, there's just not that bullish spark going on here. But when we get into spring planting, let's just say this market changes and we start getting snow and cold weather in April and May, which, dear Lord, please don't let that happen to me up here. But if that does happen, all of a sudden we're talking about losing, 10 million acres to prevent plant. Well, all of a sudden the 4 million that we could lose in corn happens easily. And the funds say, well, I don't want to be short anymore. And just them exiting short positions, which by then I'm anticipating to be about 350,000 short. Well, just that short covering rally could be a big rally, Jesse. So I don't want to panic sell new crop here. But because of all the bearish stuff you and I mentioned before in this episode, when we do get those rallies this spring and summer, whether it's Iowa drought, torrential rain, prevent plant on Dwayne's farm, there's rallies meant to be sold.
Yeah, rallies meant to be sold. I think that's a great way to sum that up in the grains. It's like to what I said earlier, just having risk management, making sure you have a plan in place and not just ostrich bury your head in the sand, right?
Absolutely. The hedgers won, I guess you could say, in 2023, right? And with me saying the bull cycle's over, it's time for the hedgers to win out again. You can't just plant a crop and wait till harvest and then ask your broker what to do. That's a little too late then. Trust me, I've tried to make my magic wand work here, but I can't do it.
Dwayne, let's go to livestock. You talked earlier about the cattle inventory numbers that came out midweek and down 2%, fairly neutral to friendly, I would say. It seems like the report was fairly well received here at the Cattle Industry Convention. There's been a lot of talk this week here about rebuilding the herd, what that's going to look like. Economics still look fairly good for the cattle producer. Your thoughts on the cattle markets here to round out the week and some of those inventory numbers and what this market could potentially be looking at here in the next few weeks ahead?
Yeah, I'm falling in love with the cattle market again, Jesse, to be honest with you. And I bet you it was a fun week to be down there. You get through all these conventions, all the meetings during the day. Some of us like to go to local establishment. You know how there's those different levels of whiskey behind the bar? And with today's market, I'm guessing we went a couple shelves up and this week on the drinks of choice, I bet, down there. And
I think so. Yeah.
I think they should. Okay, so I'm rambling like I always do, but back to the cattle inventory report. Bullish, but Jesse, was dead on expectations, but we rallied sharply the next day. I think the reason why is it just confirmed to the funds who are buying that buying is the right thing to do. The herd is shrinking. We're not growing. I mean, we're going to be smaller than last year, and look at the prices we got to last year, right? So I think you've had a flip where at the end of 23, remember all the funds liquidating all those positions and how far we dropped. I think you got the exact opposite happen, Jesse. I think the funds are coming in, buying the heck out of feeders and live cattle, and why not? The supply is tight. So yeah, big bullhorns here in the cattle market for me. I think we probably try to test the highs from last year, but I hate to almost even say that out loud because, I'll jinx it or something. So let's just back up and cut that out and edit that part.
Are we looking at locking in floors then potentially here at some of these levels at least for the time? I mean, what are we doing in this cattle trade? Are we getting smart and doing some hedging here? I mean, what do you think?
That's just, it's hard for a producer to hedge after a broker rambles on like I just did and talk how bullish I am, right? And I understand that. I'm the same way. But here's what I'm going to suggest. We're at this 244 area, 245 area in feeders. You get that anywhere close to those old highs, then you got to go out back and look to lock those in. And if you wanted, I've had some guys already ask me about doing some risk management, locking stuff in back there. Because, those back months are that 273 area right now. To me, you get those at 280, which is only $7 away. You start looking at the LRPs, the insurance, which I'm sure you've talked about down there, put options, maybe something that still gives you upside potential for this big year that could happen. But yet, man, that's capital gains and profits sitting out there that is really hard not to do some risk management. It'd be just poor business not to.
Definitely. How about in the hogs? Hogs felt like they kind of followed cattle here throughout the week. Any notes in the hog trade?
Well, I think they got their own bullish story going here, which after a horribly boring trade for about 2 months, sitting at the lows, we finally made that seasonal bottom, and cash has been grinding higher rather nicely. So with cutouts, and the China story, of course, has been out there all the time about how they're cutting their herd size, right? And that just sounds bearish. They don't need that many. Well, their price has really shot up here lately this week, but that might be because we're right in front of their Lunar New Year where they were buying up supplies. So, but they were even in buying some of our pork too. Really good export sales there. Now the higher dollar is going to eventually curb that, but they've got their own bullish story. The hog market does. I've been impressed with the rally. I don't know how much further we can go. Therefore, once again, you look out to July at $98, and I kind of wonder if maybe that's a bit of a hedging opportunity. Not an expert in the hogs, but it sure is a lot better than we were 2 months ago.
Definitely. Well, and I think about these markets too. There's been a lot of talk about demand domestically and internationally here at the Cattle Industry Convention. I think back to what we were talking about earlier in the show with the economy, that's going to be an interesting thing to watch here throughout the entire protein sector in this year ahead, I think, Dwayne, and how that affects the market action. I'm
glad you brought that up. At one point in this video, we talked about, the probably lower economy outlook for our Dow because interest rates aren't going to get cut, right? And now I see we are recovering nicely in the Dow here, but if our economy would struggle, these high-priced meat prices will struggle too. So as bullish as I am, let's be smart about it and protect these prices. There's nothing wrong with a put option, right? You spend that money and you hope it's a waste of money. So you can be bullish, but still be smart.
Definitely. All right, Dwayne, final thoughts from you. Anything you want to mention or reiterate to folks as they try to navigate the dynamics in this market trade right now? What would you say to folks?
I really like what you said, Jesse, that, risk management is going to be key when you're not in a bullish market. Those bullish markets feel like you can do nothing and win. That's not the case anymore in the grain. So have that plan in place. And even though I'm bullish cattle and feeders, after rallies a little bit more here, watch us and our advice to get some LRP, some insurance on it, and go from there. That's a good summary. And stay away from that bottom shelf if you can. Stay on that top shelf as long as
I like where your head's at, Dwayne. Very
it's
much.
a Friday, right?
Oh, man. If folks want to reach out to you, get some advice, get some thoughts, I know they can reach you very easily. How can they get hold of you, Dwayne?
Yeah, 605-448-2365 is our office number, and they can check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always good to chat with you, my friend. Thanks for joining us on Market Talk here this week. We appreciate it.
Yeah, thanks for having me, Jesse.
And thank you for listening in. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.